Right, stop what you're doing for a second. While everyone's arguing whether Rachel Reeves will put up income tax or national insurance, there are some absolutely brutal tax changes brewing in the background that could cost you thousands more than obvious ones. And I'm willing to bet 99% of people watching this have no clue they're coming. By the end of this video, you're going to know exactly what's hitting your wallet and what you can actually do about it. What's going on, everyone? So, the autumn budget drops on November 26th, and yeah, we all know the headlines. Rachel Reeves under pressure to plug a £40 billion deficit while honouring Labour's pledge to not raise income tax, national insurance or VAT, according to BM magazine. But here's what's mental. While the media's got you distracted with the obvious stuff, there's a whole arsenal of stealth taxes and hidden changes that are about to absolutely hammer your finances. I'm going to break down the 5 biggest ones that will actually affect you, with real examples so you can see exactly what this means for your money. If you want to protect your finances from these changes, smash the like button right now. It actually helps more people see this crucial information. The stealth tax that's already robbing you. Let's start with the sneakiest one, fiscal drag. Now, don't worry if you've never heard this term before, because I'm going to explain it in plain English. Here's how they're stealing your money. They keep the tax brackets the same, while your wages go up with inflation. So you end up paying the higher rates of tax, even though you can't actually afford any more stuff. According to Blick-Rothenberg's analysis, income tax has increased by 8% in total, a development in which it's been driven by higher wages, but is also because of fiscal drag caused by both the Conservative and Labour governments, who froze the personal tax allowance and various income tax bands over a number of years. Let me show you exactly how this works. Say you're earning £45,000 right now. In the UK, you pay 20% tax on everything between £12,570 and £50,270. So most of your salary gets taxed at 20%. Your employer gives you a 4% raise to £46,800 to help with the cost of living. Sounds good, right? But here's the trick. While your salary went up, the tax band stayed exactly the same. You're still paying 20% tax, but on a bigger chunk of money. So even though your purchasing power hasn't really increased because of inflation, you're paying more tax. Now imagine this happens every year for several years. The House of Commons Library confirms that although Chancellor Rachel Reeves announced that the government would not extend the freeze on to income tax thresholds beyond April 2028, we've already had years of this stealth tax hitting everyone's paychecks. Check your pay slips from 2020 versus now. I bet your salary's gone up, but your take-home pay feels about the same. That's fiscal drag in action. Drop a comment if this sounds familiar to you. Have you had pay rises but somehow still feel like you're not better off? Let me know your experience. The pension attack that could ruin your retirement. The next one is genuinely scary if you're saving for retirement, and it affects anyone with a pension. According to Bishop Fleming's latest analysis, they're seriously considering reducing or removing altogether the current 25% tax-free lump sum on pension withdrawals. Let me explain what this means in simple terms. Right now, when you retire, you can take 25% of your pension pot completely tax-free. It's one of the biggest benefits of saving into a pension. Let's say you've been saving £200 a month into your pension for 25 years. By retirement, you've got about £150,000 saved up. Under current rules, you can take out £37,500 tax-free when you retire. That's a nice chunk of money for holidays, home improvements, or just peace of mind. But if they scrap this tax-free allowance, you'd pay tax on the full amount. If you're a basic rate taxpayer, that's £7,500 gone. If you're a higher rate taxpayer, that's £15,000 disappeared. That's money you've already paid tax on when you earned it, and now they want to tax it again when you take it out. If you got a pension, this could seriously damage your retirement plans. If you haven't started a pension yet, this makes them way less attractive. Are you saving into a pension? Let me know in the comments how much this would affect your retirement plans. The property tax nightmare that's coming for homeowners. This one affects anyone who owns a property, and it's going to be brutal. Your council tax bill is based on what your house was worth in 1991, over 30 years ago. Most houses have gone up massively in value since then, but your council tax hasn't reflected this. That's about to change. Think about a typical family home. In 1991, it might have been worth about £80,000, putting it in Band D for council tax. You're probably paying around £1,800 to £2,000 per year right now. But that house today is probably worth about £350,000 to £400,000. When you revalue council tax bands, which they eventually will do, you could jump from Band D to Band G or Band H. That means your council tax could go from £2,000 a year to £4,000 to £5,000 per year. That's an extra £2,000 to £3,000 every single year just for living in the same house. And there's nothing you can do about it because you can't exactly move your house somewhere cheaper. For landlords, it gets even worse. According to Property 118, the Treasury is considering national insurance for rental income, which would add another layer of tax on top of everything else landlords already have to pay. If you own your home, start budgeting for potentially higher council tax. If you rent, expect landlords to pass these costs on to you through higher rent. How much do you think your house has gone up in value since 1991? Drop your guesses in the comments. The investment tax that's already hit. This one's already happened, but most people don't realise how much it's actually costing them. The government increased the main rates of capital gains tax from 10% and 20% to 18 and 24% respectively, according to official government documentation. Let's say you bought some shares or Bitcoin for £5,000 a few years ago, and now they're worth £15,000. That's £10,000 profit. Well done. Under the old system, you pay nothing on the first £12,300 of gains, so you'd pay zero tax on the £10,000 profit. Now, you pay nothing on the first £3,000 and then 24% on the remaining £7,000. So that's £1,680 in tax on the same investment that used to be completely tax-free. And they're talking about scrapping the £3,000 allowance entirely. If that happened, you'd pay £2,400 in tax on your £10,000 gain. If you invest in shares, crypto, or even have a second property, selling anything for profit is now way more expensive. The inheritance tax trap getting worse. This one affects ordinary families who definitely wouldn't consider themselves wealthy. According to Simply Business, the inheritance tax threshold has been the same since 2009 at £325,000, but house prices have gone absolutely mental since then. Your parents bought their home in the 1980s for £50,000. It seemed expensive back then, but they worked hard and paid it off over 25 years. That house is now worth £500,000. When they pass away, everything over £325,000 gets hit with 40% inheritance tax. That's £175,000 taxed at 40%, a £70 tax bill that your family has to pay. Your parents weren't wealthy, they just bought a normal family home that happened to go up in value. But your family might have to sell the house to pay the tax bill, even though it's been in the family for decades. If your parents own their home, there could be a massive tax bill when they pass away. If you're older, this affects what you can pass on to your kids. Does this seem fair to you? Let me know in the comments what you think about taxing family homes like this. Right, I've given you the bad news. Now let me share some practical steps that you can take to protect yourself. For everyone, check your pay slips. Compare your take-home pay from 2020 to now. If it hasn't kept up with your salary increases, fiscal drag is hitting you. Review your pension. If you're not contributing yet, start now before they make changes. If you are contributing, consider increasing it before the tax relief gets reduced. Budget for higher property taxes. Start putting aside an extra £100 to £200 per month if you own a home. If you have investments, use your ISA allowances. You can put £20,000 per year into an ISA completely tax-free. This protects you from capital gains tax changes. Consider timing. If you're planning to sell investments, do it before they make capital gains rules even worse. If you're a parent or homeowner, get proper advice. Inheritance tax planning is complex, but there are legal ways to reduce the tax bill. Start early. The earlier you plan, the more options you have. Look, I'm going to level with you. The government's in a really tight spot financially, and they need to raise money somehow. They've promised not to raise obvious taxes that grab headlines, so they're using stealth methods instead. According to Safri's analysis, it's widely expected that there will be tax rises. And what I've shown you today proves that the hidden taxes are often worse than the obvious ones. The key thing is, you now know what's coming. Most people will get hit by these changes without realizing what's happening. But you're ahead of the game because you understand how these stealth taxes work. Which of these hidden taxes worried you the most? Are you going to take any of the action steps I mentioned? What other money topics should I cover to help you stay ahead of the government changes? Drop your answers in the comments below. I read every single one, and I'll reply to as many as I can. And if you want more content helping you understand exactly how the government policy is affecting your money, hit the notification bell. Because while these changes might be sneaky, staying informed definitely isn't. I'll see you in the next one, and remember, knowledge is power when it comes to protecting your finances. Peace.